Welcome back, traders and investors. My name is Jake Lakier, and you are listening to Pre-Market Prep, brought to you by Options House. On the line right now, we have Rahul Saraogi. He's here to talk about his new book and tell us a little bit about what's going on over in India, so we can learn a little bit about the emerging markets. Kyle Snazzy Bazzy has hopped on the line with us as well to help us out with some of these questions. So good morning, guys. Ready to kick this off.
Rahul, how's it going this morning?
I'm doing good. How are you?
I'm excellent, my friend. Just watching the markets, looking at some all-time highs, but we talk all too often about the U.S. markets. As our interview just talked about, there's so many opportunities. Your background and also your book, Investing in India.
Absolutely. Kyle, I think I missed a little bit of your question there, so if you could ask me that one more time.
Yeah, give us a little background on you and also your book, Investing in India.
Absolutely. So, Kyle, I live in India. I'm dialing in from Chennai right now. And, I grew up in India. I went to the Wharton School in the US, and I've been managing money professionally in India now for the last 12 years. And I've been involved with the Indian markets for the last 15 years. I advise the Atyant family of funds, which are long-only investors that focus on, bottoms-up, fundamentals-based investing. Over the years, I've been, meeting investors both in the US and in the rest of the world. And India is really, a misunderstood market. It's a very intriguing market and puzzling market for many people. So I decided to put a lot of these conversations and some of my thoughts and views into my book, which came out earlier this month, called Investing in India, Value Investor's Guide to the Biggest Untapped Opportunity in the World.
Very cool. What is your overall outlook on India right now, Rahul? I mean, I think that seems to be a good place to start, because I feel like we've got a lot of investors here thinking about how to expose themselves correctly to the emerging markets. What's your outlook right now?
The outlook is really positive. One thing that people sometimes don't stop to think about is India is a country of 1.2 billion people. That's 1 in every 6 people on this planet. And not many people know that 50% of India is under the age of 25. It's a democracy, it's got rule of law and all of that, it's got a free press. Unfortunately, I think what happened in the last 10 years is India started getting compared to China, which has a very different political system, which has a very different economic model. And India got sidelined in that process. But I think it's an opportunity for the next 20, 30 years, in my opinion.
Rahul, you say, what was that number you said of how many people are under the age of 25? What percentage?
It's 50%.
Wow, that's incredible.
People.
You mentioned before we got online or on air here about some big governmental changes, and that's obviously the stigma, over on the other side of the water that we look at when investing into India. Can you explain the government environment there?
Absolutely. So, India has a democratic form of government, so it's the largest democracy in the world. India became independent a little over 60 years ago. And for the 60 years of its independence, it's for the most part had a left-leaning or socialist government. Even though India started opening up its economy in 1991, it hasn't really had a right-leaning government for more than maybe 5 years. What's unique about the new government that's come in now is that it's come in with a decisive majority in parliament, and it's a right-leaning government, which is right of center. So it's pro-business, business-friendly, investor-friendly, development-friendly. I think it's almost as momentous an event as the fall of the Berlin Wall, or the start of India's economic liberalization, or Deng Xiaoping's visit to southern China. I mean, it's hard not to be hyperbolic about what has happened.
Just want to remind everybody here that you are listening to Rahul Saraogi here on the Pre-Market Prep, brought to you by Options House. If you guys have any questions you want to ask, feel free to drop them in the chat. Rahul, very interested in hearing what some of your stock picks might be right now. I know there are a few Indian companies traded on American exchanges, and I think that might be a good idea a good place to start, perhaps ETFs or just individual equities. What are you looking at out there right now?
So, we straddle 3 jurisdictions, so I can't really mention individual stock names, but let me give you a sense of what India looks like. The Indian index has about 30 large-sized companies, and then there are thousands of companies outside the index, which are, mid-sized companies. I think that, it's hard to access India. It's hard to buy individual stocks in India. But if you were to ask my view over the next 3 to 5 years, I think buying the ETFs, investing in large cap India is an opportunity. I do know that there are some ETFs that invest in mid-sized Indian companies. I think that those are good investments to buy. I think what's important is that every investor listening to this call should have a small piece of their portfolio exposed to India. Because I think that we're at the start of a secular bull run in India.
That's a really good point about the investment into their country and the different markets to play, especially with limited access to the actual stock market there. Besides, housing and everything, how do you think that the younger generation, you said 50% under 25, plays into what we couldn't invest in? What does that look like?
Absolutely, and Kyle, I've touched on some of these things in my book. So I believe that there is opportunity in virtually every sector. Let me touch upon a few. Obviously, there are opportunities in consumption and consumer-facing stocks because obviously, as the population grows and their purchasing power improves, there is a huge consumption engine which is in motion. In addition to that, India has 200 million people who will join its workforce in the next decade. So you have a huge infrastructure built out. You're going to have factories created. You're going to have manufacturing. That's driving resources investing. That's driving basic industry like metals, mining. The automobile industry is doing well. India has a very, very large export sector, in pharmaceuticals and IT services. I think what's really important, and this is something which I touch upon in my book, is to find the right management, to find companies where the governance is right, where the capital allocation is right, and I think that there are opportunities in virtually every sector in India.
Again, this is Rahul Saraogi, the author of Investing in India. Now, Rahul, you're not just some 2-year rookie here with the India investments and what's going on with that landscape over there. You've been following for 10, 12 years or something like that?
I've been involved with the markets for 15 years, Kyle. So I've seen 4 major busts and several minor ones along the way.
So let me ask you, what's different now for investors than it was previously in India?
Markets, like economies, follow a cycle. And every couple of years there's a business cycle that comes into motion. I think what happened in India since the financial crisis in 2009 is sentiment collapsed, earnings collapsed, the economy slowed down significantly. What the market has going for it now is we've started from very low multiples. Earnings are accelerating, GDP growth is accelerating. We have stable leadership. In my experience, the biggest money in markets are made when you have expansion of multiples combined with growth in earnings. And in my view, we're just at the start of that in India.
So one of the questions that we got from the chat here, Rahul, and it's very interesting to me, is one of the questions was, is the violence over in India a risk to investing? What do you think about that?
What was the question? The violence in India?
Yes, coming over from Newbie Trader here. Is violence in India a big risk for investing?
Not really. I mean, it's a very large country. It has a very, very vibrant and active media. I think that it is one of the most non-violent societies in the world, actually. I think the few episodes that make it to the media are, few and far between. So I don't see that as a concern one bit.
That's a great question. In terms of the actual risks, though, Raul, I mean, not everything is all sunshine. What are the risks when, especially US-based investors are looking to use India as a vehicle?
Absolutely. So, my focus is investing in public markets. As I touch upon in my book, the experience of investors in the last 10 years has not been terrific. And, in my view, a lot of those experiences have been poor because of self-goals that investors have made, if I was to use soccer parlance. And the basic problem is that, India is an emerging market. It does go through this risk on, risk off play. So when India becomes exciting, a lot of capital comes into India. People get carried away by the fads, the hot stories, like happens in any other market. I think what's critical for investors investing in public markets is to maintain discipline and to stick with managements where the standards of governance are high and where capital allocation is sound. In my experience over the last 15 years, if investors watch out for those two things, the rest of it is taken care of by the market.
Great point, everybody, and keep bringing your questions into the chat room for Rahul Saraogi, who we're here with, author of Investing in India. All right, Rahul, let's ask you this, and where do you think we go from here? Obviously 2014 in the US has already turned out not to be 2013 in terms of, a relentless bull market. What is India's stock market like right now, and what do you see for the rest of the year?
Absolutely. So one of the things that happened, Kyle, is I think, after the great, boom of 2006, 2007, and then the great bust of, 08, 09, in 2013, the world sort of separated, it became uncorrelated. So, China did average, India did terribly last year, and obviously the US and Europe did pretty well. In 2014, we're seeing China slowing down, we're probably seeing the US moderating, but we're seeing India accelerate. So if I was to use the broad metric, which is the Sensex, which is the Indian index, the Sensex is at about 25,000 right now. And earnings multiples are probably in the low, high teens to low 20s, depending on how you look at it. In my view, Indian GDP is probably going to increase from sub 5% levels to about 7.5% or 8% levels in the next 2 years. And I'm looking at earnings, doubling or even tripling from here in the next 2 to 3 years. What's likely to happen is, I think, with investor confidence returning, the Indian market is going to become significantly more expensive in the short term. So I think over the next 6 to 9 months, you could see the market continuing to head higher and the earnings to catch up with a lag. So, I frankly believe that we're on the first floor of a multi-story building over here.
Once again here, guys, we have Rahul Saraogi here. If you guys have, appreciate you guys dropping in all the questions into the chat. We've got one more that we can get to before we got to wrap this up. Coming from MSU Mac here, asking some questions about gold consumption in India. I know that's a hot button issue, to watch for gold prices and how consumption is going there. What's your outlook on that?
Absolutely. So I've written extensively about gold and land in India. So, India is a 5,000-year-old civilization, and, it's been ruled by different rulers over the millennia. What Indians have realized over time is that for the liquid side of their investments, they've invested in gold, and, it's an agrarian economy, so they've invested in land over time. Financial assets, made up only 2% of Indian household savings, which is almost 36% of GDP. I'm sorry? You have a point there?
No, continue, sorry.
Oh, okay, sorry. So, financial savings of Indians will increase. So I think the 2% will head towards 5%, as people start saving for retirement and college, etc. But I think gold remains a favored avenue of saving for Indians. However, as the Indian economy matures, I think over time, the move towards financial assets will be stronger And I think the traditional affinity for gold will probably dull. Maybe not go away, but it will probably dull over time.
Very interesting.
All right. All right, Rahul. We really appreciate you coming on the show. We hope to have you on again. There's some more questions about stock ideas and everything in the chat. I would love for you to log in and start talking with them. Everybody, that was Rahul Saraogi the author of Investing in India. I'll drop the link to the book one more time in the chat room. Rahul, awesome insights, man, and we appreciate you coming on today.
Thank you for having me.